Hi there, Brock VandenBerg, president of TaliMar Financial and fund manager for TaliMar Income Fund I. As you probably recently heard, the mortgage fund has surpassed $100 million in total investor capital. So a common question I'm getting from investors is, Brock, what does your company look like now that you are managing over $100 million in investor capital? Well, it's really evolved over the last 4 years, and that's since we've launched the mortgage fund. So when we originally launched the mortgage fund, we had maybe 4 or 5 employees at the time. I was really responsible for originating the loan portfolio. We had somebody assisting with underwriting all the loans that we were coming in, and then boarding those loans with our servicing vendor, and then servicing those loans. We had someone else involved with. So generally, I think it was about 4 or 5 individuals at the time that we could manage when we transitioned in and launched the mortgage fund. But now that we have over 100 million invested, currently we are originating between 12 to 14 million a month, which is about 15, let's just call it 13 to 15 loans every single month. So on the front end, we've had to hire on a loan origination team. So no longer is it me going out and originating new loans, but we've got a very good team dedicated to identifying new lending opportunities and creating those relationships with mortgage brokers and with our real estate, our borrower clients. So number 2, underwriting. And this is really critical. So we have someone dedicated to underwriting and reviewing all of the loans that come through our door. That's important because we want to make sure that obviously every single loan meets the credit criteria that we have spelled out. Number 3, we have a full-time loan closer. So this person is really responsible for working with the escrow and title companies to obtain the preliminary title report, draft up loan documents, ensure that the lender instructions are being followed, dealing with closing statements and whatnot, making sure those loan documents do get signed, and if they are signed, that they have all been signed, obtaining the original copies, just really ensuring that the closing runs smoothly. Also added on a full-time loan servicing person. So this person kind of takes over at the time of when the loan closes, and then managing that loan through its life cycle. So making sure that it gets boarded or added on to our portfolio with our loan servicing partner, making sure that the borrowers know how to make payments on that loan. If there are any late payments, reaching out to the borrower, handling any construction draws, are kind of the responsibility of the loan servicing person. Then we have a full-time investor relations person. So now we've got, of the 100 million, we've got about 325 individual investors. So we're starting to see a lot more calls coming in, asking about the performance of the mortgage fund, people interested in adding money to the fund, investing in the fund. That is really the responsibility of the investor relations person. And then also making sure that we're communicating with our fund administrator. Fund administrator is somebody that does the day-to-day accounting. Imagine just an accountant for the fund. So we've outsourced that portion of managing the fund. And then also they're responsible for calculating the distributions for the investors in that for that month. Also have a full-time operations person, so someone who's responsible for kind of the day-to-day activities of the entire team member. We've got a marketing department that's responsible for sending out our messaging out to both our borrowers and our investors. And then we also have an admin here in the office to help kind of fill the gaps where necessary. So right now we're about up to 12 full-time employees that are managing a mortgage fund of about 100 million. Now, another question I'm getting is, Brock, kind of long term, where do you see the mortgage fund going? And I'm kind of going with the opportunity right now. I would say that in the last 5 years, we've really seen the private debt space explode. We've seen a lot more players coming into the marketplace. When I first started in the private debt space, it was more of a mom and pop shop. There wasn't a lot of consistency amongst different private lenders. But when you saw kind of Wall Street come into this market, they recognized the opportunity, the incredible returns that you could earn, and just the size of the industry. They kind of created a kind of a professional platform, I guess, if you would, of how to grow a mortgage fund. So it's really matured, I'd say, over the last couple years that you've really seen this industry really kind of solidify and mature. So that's kind of how the mortgage fund evolved, or since accepting our first dollar. And kind of, as I mentioned, I see a tremendous of opportunity to continue to grow and really kind of get to grow within this industry. Thanks for listening, and definitely check out my YouTube channel for more information on investing in trust deeds and mortgage funds, kind of where the industry is going. If you like this video, give it a like, subscribe to the channel. But best of all, thanks for listening.